So, welcome again, everybody. It's Stuart here from Forex. Apologies about that big black square there. Let's move that slide off. It's all about the news today, fundamental analysis, and it doesn't want to move. There you go. So, not all news is equal. So, it's how fundamental analysis on news questions is probably the the topic I get most questions about. So let's try and go through and simplify it a bit for everybody today. Obviously, any questions, stick them in the question box. Anything I don't answer properly, please email me at webinars@hotforex.com here, and I'll get back to you as soon as I can. Any issues with GoToWebinar itself, obviously try restarting your end. Switching your device off or restarting GoToWebinar if there's any video or audio questions. Hopefully everybody can hear me okay. Quite a full house today. Lots of quite a number of names I recognise. Lots of new names I don't recognise. So welcome everybody. Before we get going, I need to go through our disclaimer. So the material is provided as a general marketing communication for information purposes only. It does not constitute independent investment research. Nothing in this communication contains or should be considered investment advice or an investment recommendation or indeed a solicitation for the purpose of buying or selling of any financial instrument. All information is provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in forex and CFD product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Okay, so that's the admin out of the way. And for those of you that are new, and there's definitely a few names in here that I don't recognise, my name's Stuart. I'm in my, mid-50s, I suppose you've got to call it now. My background, I've done lots of different jobs in my life, but I've spent 20 years in the City of London working for investment banks and retail banks, and I've been trading my own money, investing since 1997. It's 20 years just gone actually, and four things I distill my trading down to. Didn't take me 20 years to realise this, but you know, if it's probable, I will take it. I will take the trade. I don't try overcomplicate things. I have a system that works for me, and it's profitable in the long term. So taking a loss is just part of the business. So keep things probable. Don't overcomplicate things. Don't have loads of indicators on your charts. Don't try and understand every single nuance, every single piece of news. And that's what we're going to talk about today in a bit more detail. Keep it simple. Look at multiple time frames. There was a classic little move this morning. 1 hour and the 15-minute charts came nicely together for on the cable trade this morning. Key levels and 15-14 pips were bagged very straightforwardly. But most importantly is that last one there, is to know yourself, because this business, in my humble opinion, is a psychology business, not a trading business, not a method business, having the best indicators or the best robots or whatever it is that you use to trade. It's all about you. It's what's between your ears, and it's understanding yourself, and it's 90% psychology, and psychologically approach to the bit market helps. So if you know yourself, you know you can accept losing, because that's one of the biggest problems many new traders or experienced traders have. They don't accept losing. If you can do that, you can get off first base, as I call it. So anyway, there's a whole webinar and all those separate things, and look them up on our past webinars site. But keep probability on your side, keep it simple, look at multiple time frames to help in and out, but importantly, know yourself. So today we're going to look at news and the fundamentals, and what fundamental analysis is and where it came from. 6 key events that impact all currencies, and so if you've got 6 or 8 key currencies that you trade, and you've got 6 events that affect in those currencies, plenty of key major opportunities each month, each week that comes up, and you've got to plan yourself. Looking at alternatives, too much, too little, keeping focused, and obviously any questions you have. So fundamental analysis, not all news is equal, so some news is much more significant and important and market moving than other news. Okay, so it's filtering out. Excuse me. And as I said at the beginning, it's probably the one thing that I get most questions about. Why did it do this when this happened? This seemed like it was a positive for the after the yen, but the yen went down. Why was that? Well, sometimes we just don't know, and you just got to accept that the market is always right. Okay, whatever the market does, it's always right. It doesn't matter what we think. It's what how the market interprets the news. That's the most important thing. And if you can't accept that, or you get hung up on being right, because that was one of the problems I had when I first started. I wanted to be right all the time. It wasn't so much the losing that impacted me. Obviously, losing money doesn't help, but it was the fact I wasn't right. And then until that light went off in my head that it didn't matter, and you can be wrong a lot of the time. In fact, you can be wrong up to 50% of the time and still make money in this business. There isn't another business or trade that you do, whatever you guys out there, whatever job you do, you can't get your job wrong 50% of the time and keep it, can you? You know, imagine, I don't know, an accountant or a banker getting things wrong 50% of the time, or or a doctor or a lawyer, a pilot getting things wrong half the time. It just wouldn't happen. With this crazy business, you can get things wrong a lot of the time and still be successful at it. And that's the key thing. That's why it's such a mind game. Anyway, that's a story for another day. So it's the same with the news. Don't get too hung up on every single piece of news. So fundamental analysis really it has its origins in the stock markets, in the equity markets. So companies and their stock price, and it's based on bank analysts, investors, traders. They've got all this money to invest. Individuals have this money to invest, pension funds, hedge funds, and they all scroll through, they do their research through the companies, what to invest in. And obviously when you're investing in a company, traditionally if you're investing a large sum, you're looking for that investment to go up. It's only recently where people have had the ability to go short on currencies, on the stock market. That isn't traditional. Long-term investors, they put their money in a company and they're expecting it to grow. So they need to know all these different technical things. And I'm not going to bore you with all this jargon today, but basically, PE ratios, price-earning ratios, that's what these guys pour over. They're looking at earnings, future potential, for companies. And companies have to report every single quarter. That's why the earnings season, as you hear me talk about and you hear on the market news, is so important about how the stock markets are going. So if companies are doing okay or better than expected, that has a ripple effect through the rest of the markets, has an impact on bonds, obviously, and forex fundamentally sits in the middle of all these different markets, the equities markets, the commodity markets, and the futures and the bond markets. So it's the currency that funds all these things. So again, they're looking for cash flow, how companies are doing, or cash burn. They're spending millions or billions in some cases. Tesla recently reported it's spending over $1 billion each quarter. That's what their investors have got to put up with until this company turns a profit. Amazon, very, very famously, very, very rarely turns a profit, or a very, very small profit. It's all about all that profit being reinvested, all the money it makes being reinvested in the company for future growth, future sales forecasts, as it is with Amazon. So, quarterly and annual accounts, these guys, these investors and traders pour over all this, want this fundamental information, these the accountant type predictions about where the company's going. Also, part of fundamental analysis is the style of the management, the quality of the CEO. You quite often see when a CEO changes, a stock price might go up or down depending on how the market interprets that particular individual. So the board itself, the chairman, the CEO, and the wider management team, some can be held in great reputation, and if a team of managers leave, it sometimes affects the stock market or the future earnings, the future sales of that particular company. So that's key, and that's what that's basically what fundamental analysis is from a company point of view or from a commodity point of view. In forex, it's principally these sort of things don't have any meaning for us as forex traders. In forex, the fundamentals is really the news, and the issue we're going to go through today is what is the news, but what type of news. So there's the economic data, but there's also the political news. or the political impact as well. So that's one to keep an eye on all the time. And as I said at the beginning, if you're looking at, remember when you're trading forex, it's fundamentally you're looking at the difference between the two currencies that you're trading. So ideally you'll be looking for a strong currency against a weak currency. So if there's some strong news for one currency and weak news for another currency, that's only going to go in one direction. And last week's NFP was a great example of that, and we'll come on to that later. But the most important is obviously news that affects the US dollar. So US political news and US data news, economic data, is by far the most important news that we need to worry about, because the dollar is in 90%, virtually 90% of any forex trade. It's 87, 89 point something percent, isn't it? All companies own dollars, all countries own dollars. The price of the dollar is fundamental to the price of commodities, because it's the price that commodities are all priced in. That's why we're so obsessed with what's going on in the States, the news out of the States, and also the political news. That's why President Trump, love him or hate him, you need to be aware of what he's saying and what he's doing, because he has an impact on obviously the future of the USA, and that's why it's so literally fundamental. So if you're going to look at trading and news, or trying to see how the news impacts yourself, you want to decide on what are the key news items out there. Okay, and and this is back from February, so it's obviously last time I did this webinar seminar. Perhaps I should do it more often. But the events on our economic calendar are the big high impact red events. Okay, and you can plan this. They're available at least a month ahead. Obviously, of most economic calendars, and ours certainly is at least 1 month ahead. And what you're looking for are these big economic data releases, political comments and events, and speeches by key people. Okay, so here, this is the week of what it was, February this year, I would guess this is, yes. And the major events of that week, there was 1, 2, 3, 4, 5, 6, 7, 8, no, 7, I can't add up, 10. So there was 10 key events. So if you only wanted to trade the news, you couldn't get to watch the markets all the time, but you only wanted to trade these key events, these key announcements. These are the times that you should be, around, or be aware that if you've got trades open, that these key events could have an impact on it. So, for instance, when we did this on that Tuesday, these events actually all missed their expectations, and we'll come on to that in a minute. So these are red, so they missed the consensus, the expectations of what was going to come out. So logically, that should have had a negative effect on the euro and a negative effect on the pound, but again, don't know what that actually was. But this is a really good example, actually, this first one here. Let's just concentrate on this first one. So previously it was 1.6%. The consensus was that it was 1.9%. So it was going. That's quite a significant increase. 0.3 is quite a significant increase in 1.6 for it to go up. But it missed. It only missed by 0.1, so it came in at 1.8. So it was better than last time. So that's positive. But it was worse than what was expected. So overall, the pound probably went down on that day. Even though it was better than last time, inflation was going up, and that's one of the key things that the Bank of England have been wanting, and all central banks want. But it missed what it was expected to do. So it missed by 0.1. So that's think of it in percentage terms, it's a 33% miss on expectations. So that's probably the thing that's driven the markets, because the market was expecting this, so the pound would have reacted according to this number before it came out. When the number came out at 9:30, we probably had some great volatility on the pound, because it was better than expected. Sorry, it was worse than expected, but it was better than previously. And that's how to trade these sort of news items. Anyway, we'll come on to some examples in a minute. So this is the thing you want to do. So you want to look at the red high impact events. It gives you here 1, 2, 3, I would say 10 events this week. But for some people that won't be enough. Okay, that won't be enough opportunities. So what you could do then is scroll down to the medium impact. So instead of just looking at the high impact events, you might want to look down at the next event, which is the amber events. So for the same week, we get all this, and it's not even a week. This is just it's Tuesday, Wednesday, Thursday. Was that? Let's just go back a bit. How do I go? Oh, previous. So yeah, so we had 10 events here for those 3 days. If we add the medium impact events, we get many, many more. I can't count all these, but as you can see, there's much, much more opportunity to trade these particular news events. But obviously, you then need to obviously fit them into your time frame as well, because some events might be happening when you're fast asleep, so you can't trade those. So find out what works for you. Fit your trading around your lifestyle. And if you can't be around for these key major events, just be aware that if you've got longer term trades or you've got trades, don't be aware of these events happening. So for me, it's obviously I'm here all day. Intraday traders will be interested in this, but for many, these amber events, too much information, sometimes too much information to absorb and understand. But the principle's the same. If the event is better than expected, it should be beneficial for the currency. If it's worse than expected, it's normally negative for the currency. But there's lots of other nuances in that, and we'll come on to that in a minute. So set up your trading time frames. If you're going to trade the news, trade this fundamental stuff to fit around what you do. Okay. So what's important? Lots of news is already priced in. Like the first example we looked at, it's all about previous consensus and the actual number. So let's just go through this again. So previous consensus, actual. So the previous is what happened last time. Last time this event came out, as we've just seen, it was 1.6%. The market, the analysts, the experts, this is what the market is expecting it to come out. And then the actual, when it actually comes out at 9:30, is either better or worse than what consensus was telling us. So it's either red because it's worse or green because it's positive. Okay, and as I say, the currency should react accordingly. We'll show you some examples in a minute as well. Okay, so it's important to understand that these different columns as well. So this is what's happened, this is what's expected, and this is what actually happened this time. Okay, that's important. Also, sometimes you will get, as we had in the previous one, if you can see that we've got this little information here, because sometimes this also gets revised as well, and that can have an impact as well. And again, we'll come on to that with the NFP numbers. I'll go through that as well. So little I here says that was better, that was changed. So if so this one, for instance, top one up here, this PPI, whatever it was, yeah, PPI for the UK. So it was, consensus was 0.4%. If you can't actually see that because it's quite small, isn't it? Previously it was 0.2%, so it was looking to double, and in fact it came at 0.6%, so it's triple what it was last time. And in fact this might have been upgraded for, it might have been 0.1 last time. I can't actually see what it was previously, but excuse me. So it's probably very positive, the pound. But remember, at the same time, there's all these other bits of news at the same time coming out. So they've all got to be taken together, and they were all better than expected. So that's all seems very positive for the pound. So it's all got to be taken into account, and that explains the movements in the currencies. And we'll come on to it again. We'll come on to that in a minute. So previous consensus, what the text or expectations, and then the actual when the price actually comes out is how to read it. Now then, the most important things to worry about, the big red events, and I've ordered them in. This is in my opinion. Some analysts, some have jobs more important. This is my view of the key economic data. So these, for me, these are the 6 key economic impact importance events. So by far the most important is an interest rate decision from any central bank. So that's why we hang on, everything's pitched around the next central bank decision, and the most important central bank in the world is the Fed, and the Fed's next big announcement is on the 13th of December. So the 13th of December is cast in stone in analysts and traders in traders' mind about, and the expectations this time is that the interest rate will go up by 0.25 or 25 basis points, and that is already priced into the price of the dollar, because at the moment it's 98% chance of it happening. That's what the market is expecting. It's 98% chance of the Fed increasing interest rates on the 13th of December when they announce their decision. Okay, so when that decision is announced, the movement mightn't be as much as lots of people will be expecting. There will be some movement because there'll be some other things going on as well as that announcement of the rate going up. So just excuse me a minute. I'm a bit hot. Okay, so second is GDP, gross domestic product. That's how countries are doing. So how well individual countries or groups of countries like the euro area are doing, and that's another key event. Again, every quarter, every month with some. The Canadians produce it every month. It's every quarter for the other main economies and the main currencies that we trade. Again, I put inflation or CPI, consumer price inflation, above jobs news. Lots of people will have jobs and employment and unemployment data above the CPI inflation, but it doesn't really matter. It's just a nuance. So inflation, how much prices are going up or not going up. A few years ago, or a year or so ago, the central banks were worried about deflation, prices going down, and the impact that was going to have on economies and currencies. Now it's all about, they all have this all the main central banks have this target, you hear them talk about it all the time, of trying to get core inflation, or however they measure core inflation, to 2%. That's the target for most of these central bankers. You hear them talk, Mr. Carney or Mr. Draghi or any of the central banks, all talking, trying to get inflation back into their economies, prices going up. So too much inflation is obviously bad, but too little inflation is also bad. So we've got inflation or deflation, or negative inflation, as sometimes you see it talked about. Fourth is obviously NFP news, and it's not just NFP in the States. It's not just about employment in the States. There's also unemployment rates and general jobs news. So there's lots of news that surrounded employment and unemployment. Okay, the highlight one, the one we all talk about, is indeed the NFP, the monthly US state of how many new jobs have been created. But there's lots of other ones. Every week they have their jobs data. They have, the Americans have this JOLTS report as well, which is job openings and people that have moved around between them before the big headline NFP number. There's the ADP number that comes out every month. That's the private payrolls that comes out on the Wednesday before the Friday NFP number. Different countries report employment and unemployment at different times as well. So jobs are vital to obviously a growing economy. Jobs tend to be growing. The problem we've got at the moment is the jobs are growing, but the economy isn't growing. So productivity is down. So the job wages, earnings, is the other key thing, is not growing. So that's restricting the growth of the economy because people haven't got money in their pockets to spend. And that's what all the central bankers are all scratching their heads about now. That's what all the policymakers are scratching their heads about now. What's happened to productivity? What's happening to earnings? Why isn't earnings rising? This is what classic economics tells us, that economic earnings should be rising now as we're at full employment certainly in the States and parts of other economies as well, as employment record lows in the UK as well. Fifth is retail sales. For me, retail sales is important in the developed countries, in these 8 key currencies that we look at, these 8 key currencies, because the consumer is king. If people are comfortable, confident, earning, spending, retail sales should be up. Whatever that retail sales is, whether it's cars, whether it's computers, whether it's new phones, retail sales, all of that is captured in that sort of data, and obviously parts of that has been sluggish. Housing is another key, probably number 7 on here. You could have had housing as well. 6 is a bit more. So these are all hard pieces of data. Actual hard pieces of data. Consumer and business confidence is a bit more subjective. It's how people feel about it, but expectations and confidence is very, very important to the market, because always the market is always looking ahead. What's going to happen? What expectations are going to happen? What is going to happen? So consumer and business confidence are very important as well. So if you've got at least 6 or 7 key indicators, not every month, obviously interest rate doesn't happen every month, but 6 or 7, let's say 5 or 6 key indicators every month affecting every key economy, and we've got seven or six or seven, eight major currencies that we look at, do the simple maths, and we got something like 50 high impact potential events each month. So even if you only trade those high red impact events, you've still got plenty of opportunities to trade the news, if you like. Okay, so even 20, 22 working days a month, 50 events, there's still plenty of opportunities just to trade those high impact events. You don't have to get drawn into all the nitty gritty. You don't have to understand the nuances of like the tip numbers that came out yesterday, for instance, that had a big impact, or the PMI numbers. They're important, and again, they're probably number 8 on this list, because that's a future looking number as well, the PMI releases. But these are the key ones. These are the ones we should be looking at, these top 6, and you could add 2 or 3 others to them as well, okay, if you wanted more opportunities. So focus on these high impact events. If you're intraday trading, if you're trading on 1 hour candles or 15-minute candles, you've got to be aware of when these news events come out. And they don't always come out at the same time. Everybody said, oh, well, all the American news comes out at 8:30 New York time before the market opens. Well, yes, it does. There's a lot of news comes out then, but there's news during the day as well. There's news after the market closes as well. So don't assume that it's always at certain key times. Also, I mean, this week's, or the last 2 weeks have been a really good example of making sure you know where the time frames are, because Europe went back into winter time and a week before New York did. So some people might have been caught out expecting news to come out at its standard time at 8:30 New York time, and it was actually an hour earlier from in their time if they were on New York time. So you've got to be aware. Keep yourself. It's up to you. It's your money. It's your investment. You've got to educate yourself. Keep yourself ahead of yourself. And even if you're, I don't particularly trade news personally, but I'm aware of these big events. And if I've got sometimes swing traders or intraday traders as well will tend to close their positions 30 minutes before a major event, and that's why you see some quite significant volatility, particularly in NFP is another great example. Significant volatility going in sometimes the opposite direction as you might expect, as lots of people get out and close their positions. Then and then after the event's happened, if the trend is still in, or the movement that you're on is still valid, either re-enter the trade, or if it's broken down because of the impact of the news, that's it. You've closed and you're out. As I said, but the other, so again, that's lots of people work that way. Trading the actual event, these high impact volatile events can be very, very risky. Okay, highly volatile and highly risky. Some people say, well, that's great because I like that volatility because I'm a trader and I want to trade. I'm happy to take my 4 or 5 pips, 3 or 4 pips, or 2 or 3 pips, whatever it is, and at these high volatile events. Well, that's fine. If that's how you trade, that's great. And if you've got a system that works for you and you can get in and get out very quickly, that's fantastic. But just be aware that these high impact events can be very, very volatile if the news isn't what the market is expecting. And that's the key thing. That's when you get these big movements, when the expectation, the news is significantly different to the expectation. And by significant, that's again, you've got to figure that out for yourself. Is this more significant than expected or less significant than expected? If it is, trade it. If it isn't, get out of it. So try to trade the expectations in reaction to the event rather than the event itself. And again, we'll see. I've got a couple of examples here of the last NFP on Friday, how that happened. A great example is this last point here about the central banks. So that, as we said, the central bank's announcement is the most important thing. So they come out with their announcement or their statement, and that gets released to the press, that gets released on the wires, and that is either what's expected or not expected. Quite often, though, most of the time, there'll be a press conference. So the central banker and his team will go and face the press and talk through the statement. There'll be a prepared statement. They'll say it again, and then it's open to the press. And then it's how sometimes they react to the questions that the press put towards them, or how confident they seem, or how dovish or hawkish, as we say, they are in that press conference. That sometimes can create even more volatility, and ideally, sometimes it can actually contradict some of the market's interpretation of the actual statement that's come out. So we get great volatility at these central bank events as well. So the announcement can have one impact, And it's not unusual for the press conference to cause a contradiction of the actual interpretation of the statement if it's not being very clear in the communication. So again, great volatility, great opportunities for trading, but again, wait, sometimes depending on the type of trader you are, wait till it's calmed down before we move on. Okay, so the other thing about news, these three things here as well, sometimes it's absorbed instantly. It doesn't happen. Ignis has just asked, what is dovish or hawkish? Dove, hawk, so I think I should explain this. Right, sorry, let me, yeah, that's fair enough. I throw these terms around all the time and priced in as well. Let me just go back to, what did I say, dovish? Actually, let's leave this one. I'm going to come through this all the way. So dovish, I'm sure you do, Ignis. Dovish means that they want to keep things the same. Usually, they're like a dove. They don't like lots of conflict. They like things nice and comfortable. So Mrs. Yellen and most of the board of the Fed tend to have been around dovish. You know, they like to do things slowly, so they don't want their currency to move very quickly. They're not going to do things aggressively. Hawks tend to be more not volatile is the wrong word, but tend to want to move things more quickly and tend to have a more direct approach, usually positive events. So the reason the dollar, for instance, has rallied in the last few weeks is because the expectation again in the market was that the new head of the Fed was going to be more hawkish, i.e. he was going to move interest rates perhaps more aggressively than a Fed with Mrs. Yellen in charge would, than she has. So therefore the dollar will appreciate on that, because it's going to be, as the interest rates go up, that'll be good for banks and also good for the dollar. So that's what the market is expecting. So I hope that made sense. Dovish, hawkish, and you see that phrase all the time in the market, and you hear that on the TV and the radio all the time as well. So all new. So again, you see the news announcement was more dovish than expected. Like the Bank of England last week when they moved, they moved interest rates up. So that should have been good for the pound to go up. But the statement and the press conference that followed by Mr. Carney was much more dovish. We're not really going to move these much more further. So the market over the next 2 years isn't anticipating much more movement in the Bank of England to move interest rates up, with all the worry over Brexit hanging over it as well. So the anticipation for the future was that this was a one and done. So therefore that's been perceived as dovish, and therefore the pound fell rather than going up when the Bank of England actually put the interest rates up. And that was a classic move last week of news that should have moved the pound up because the interest rates went up. That's what the textbooks tell us. But because the statement and the press conference and everything that's been said since then has been quite dovish for the pound, you can see that the pound's fallen quite strongly against some currencies as well. So I hope that explains doves and hawks for everybody. So as I say, 3 key things about news. Sometimes it's absorbed. So as soon as it comes out, it's just poof, it's of no interest. It's in line with the expectations. So that's it. No movement, no volatility, no good for us as traders, short-term traders. Also, remember that that sometimes the news gets out, or it's leaked, or there's gossip on the street. They're not supposed to, but bankers meet bankers in pubs and restaurants, and what's going to come out in 15 minutes? Well, we expect it this and this, and I've heard from Johnny that it's going to be this. So out on the street or over the wires, it leaked out, or it's already known by the big players. So sometimes that's already in. But most importantly is that a lot of news is already anticipated, and it's very much priced in to a currency. So don't sit there expecting on the 13th of December expecting the dollar to move very, very violently or with great volatility as they announce they're going to put interest rates up, because that's been well telegraphed to the market for many, many months now. The biggest thing would be if a bit like the Bank of England, if they didn't, or they did, and then there was some very dovish comments around on the statement that comes out as well, just like we had with the pound. But at the moment that's not That's not what's anticipated at the moment, but you see, there's still time for that to change. The other thing is, as I said, I think I touched on at the beginning, never assume with the news that 1 + 1 always equals 2. So that I've just explained that the Bank of England put interest rates up, and that should have been good for the pound, but it wasn't. The pound fell, and fell quite aggressively because of the statement. So the logic it doesn't always happen, and like I said here, it often has the opposite effect. But again, don't try and beat yourself up to try and understand every single nuance of all the news and why that might be the case, because it will drive you mad. And don't try and trade every single piece of news either, again, because that will drive you mad. I always say, trade what you see, not what you think, and that's what technical analysis helps you. It sort of clarifies a lot of the noise around the news. Okay, so pure technical analysts, chartists would say, well, I'm not interested in the news because it's all priced in. My candle will tell me, or my line chart will tell me how the market has interpreted the news, and they're absolutely correct. I can't really argue with that. But I'm somewhere in the middle, and most traders end up in somewhere in the middle. They like to have a little handle on the news. None of us are experts. I'm not a qualified economist. I don't understand all the things they say, but you just got to have a feel for what's important for your particular trading and how it fits in with you as well. I've got a question here from Richard. Let's say I'm a swing trader and I've spotted a double bottom. Is it possible the trend could change because of a high impact news so that price will never get to the... Absolutely, Richard. That's sort of what I've just said. These huge impact events, and I'll bring some examples up in a minute, could completely change things. The euro, for instance, was moving up nicely, wasn't it? We'd got to 119, 120, 121, 122. It was getting a bit high. It came down a bit. It was getting back up again, 118. Mr. Draghi came out with a very dovish statement again the week before the Bank of England, and the euro's come down again. They're still going to pump lots and lots of money into the European zone, so that's weakened the euro. And at the same time, the dollar strengthened. So again, that's a very simple trade, and you'll see the movement that the euro dollar's done in that as well. So it's all over different time frames. But absolutely, Richard, yes. But so what you would do in that case is just leave it, see what happens, see if the technical double bottom or double top or whatever it is you've identified on your charts has been negated because of the news, or does it add to the news? So it's a balancing act. And take it all into a pinch of salt. Some of the most successful traders are complete technicians or complete fundamentalists. There's a guy called, I'm sure you've heard of him. There's a guy called its name escapes, Marty Schwartz. That was it, Marty Schwartz. He's in the Market Wizards books, which I'll talk about in a minute. He, for 9 years, tried to trade the fundamentals. He discovered technical analysis, and he's made billions, literally billions since, and he's a complete technical trader. The complete flip of that is somebody like Jim Rogers, who just trades the fundamentals. Jim Rogers, very, very famous. He set up the Quantum Fund with George Soros back in the 70s. I think he left in the 80s, beginning of the 80s, because it was all getting too much regulation for him. And I remember about 30 years ago when I first came across him, no, it must be 20 odd years ago now, before I started trading, he'd already said he was moving to Singapore. He was moving east. The future's in the east, and he was a big, Jim Rogers. He's a big fundamental trader. Trades things over many years. He shorted. I remember he short his famous short on the Japanese stock market that went on for nearly 10 years. He shorted gold when everybody else was long and stuff, and over a longer period. So so you got Marty Schwartz on one side, and who only ever trades technical and is very successful, and you've got Jim Rogers on the other side, who's only ever trades the fundamentals, never looks at a chart. He's famous for saying the only rich technician is the technician that sells you his service. He doesn't know any rich technicians, and obviously Marty Schwartz has something very very different to say about that. But these guys, they're multimillionaires, billionaires, and from their trading, from their own personal assets. And again, it's in the books I talk about all the time. So anyway, I'm getting off the point again as usual. But again, the news can be, depending on how you absorb it and how you take it, Richards wrote here, what example are some of the words used that could flag a dovish or hawkish statement? Well, so for instance, off the top of my head, actually, let's go. What time is it? Oh, it's all right. We've still got 15 minutes left. Richard. For instance, in the Bank of England, they said that inflation was unsustainable at these levels. So that means that they don't need to put interest rates up. Draghi, what was one of a continued accommodative stimulus? It's those sort of phrases. So they mean in English that means, on simple terms, that means they still need to pump lots of money into the European currency economy, so therefore that's weakening the euro. It's those sort of things, and look for those key phrases that come out. And again, if you're watching the news or listening to the news, look at some of the times these key phrases are highlighted in any sort of news report. Anything I write or Andrea would write or any of the other sites you might have a look at would write. I hope that's answered your question, Richard. Right, sorry, quickly, just before we wrap up. So a great example was last week's NFP. Okay, so NFP headline on the 3rd, it missed expectations. The dollar fell because it missed the headline, but then recovered and closed the day and week stronger, especially against the euro, the pound and the yen. However, against the CAD, it was a very, very different story. Let's just we'll come on to that in a minute. But so here we are, 2:30 last week, lots of data, 1, 2, 3, 4, 5, 6 bits of data, all about the US dollar, all at 2:30. The most important one, the headline that everybody grabs, is this one. So it came in at 261. It was less than the expectation, 231. So the initial knee-jerk reaction of the market was to sell the dollar off. This had been actually, and see here there's this was actually upgraded, so this was actually better. It was minus 33, and so that was upgrade. So that was positive. Average hourly earnings fell quite significantly. It was 2.7%, so that was negative as well. So two of the big headlines. This is the one I really look at as well, the earnings one. It's only, they call it amber here, I say that's a red one, but was negative as well. So the headlines were negative, so it was weakened the dollar immediately. However, on the flip side, the positive sign was that inflation, jobs, unemployment had actually dipped again, and that was a bit of a surprise, and it was better than expected. It came out at 4.1%. So it was overall, the two big numbers were negative. Employment ticked down a wee bit, but it's at full employment even at these levels anyway. It's amazing it can go much lower than this. So that was taken with a pinch of salt. So it was negative. So we had an immediate sell-off in the dollar. Let's just jump to the next slide and see what happened. So we had immediate sell-off of the dollar. So here, this is the euro dollar on the 1 hour chart. So we immediately dipped. Euro dollar obviously rose on the immediate news. We went as high as 160. 1689, 116.90 virtually. But by the close of the day, the euro finished down here, 116.67. So big volatile movement up and all the way down. So what caused this sell-off down here? What caused the euro to then fall, having risen on poor NFP news? And we'll come on. Let's go back to the other one in a minute, and we'll come on to that in a minute. Actually, no, let's explain that one now. So the reason that this news wasn't as bad for the dollar as expected was because the number was a big yes, it missed by 50,000, but when the economists, we started analysing it, it was really and it was all to do with the fact that it was the hurricane season, so the number could have been all over the place. So the significance of the number, the significance of this revision was sort of brought into question. Yes, earnings were weak and earnings were flat, so that's still quite dollar negative. But the hard data that then came out, these PMI numbers here, this services and the factory orders were very, very strong. This is a big beat down here. So later on in the day, we had some other data which was all very positive. For the US dollar as well. So that helps to explain why we had a big negative move, but then that's what we get with NFP, big volatility. So that went with the news as you would expect. But if you just looked at this at the end of the day, you hadn't been watching what the news come out, you'd have thought when you'd looked at the end of the euro was down, you'd have thought, oh, that's actually quite good for the dollar. And it wasn't the NFP number that caused it. It was more to do with the data that followed. That's why I have such a big candle down the following hour. So it was actually still quite positive for the dollar. And as you can see, since then, we've ended up, euro dollar broke a key 115 180 level yesterday, and it's weakened again, and we were down at 115.60 levels yesterday. So we ended up here. We closed the hour still quite positive at 116.47, but we closed the day at 116.07. So the dollar actually did quite well, even though the headline was quite negative. And that's the sort of thing you want to get your head around. Yes, it is recorded, Carbo, if you can't hear anything. Is everybody else okay? There's only Carbo saying you can't hear anything, but yes, it is recorded, of course. Okay? So that was I could have put a very similar chart against the pound and against the yen. The dollar actually ended up okay on Friday, even though the headline was a miss. The flip side, though, was the Canadian dollar. And I remember when if you were watching me on Facebook Live, I remember seeing the biggest mover was the Canadian dollar, and that's simply because the headline dollar news was negative, but the headline Canadian news, which actually came out at the same time, was very, very positive. It was a big beat, so therefore the dollar CAD ended up down and fell. It retraced a wee bit by the end of the day, but it was a bigger. How much that move is compared to the euro. This was the euro in the hour the NFP came out, and this is the CAD. Much more aggressive news, and that movement, and that was all to do with the other key news of the day, which comes out at the same time. And again, a lot of traders miss this. They ignore the CAD because at the same time, usually each month, the Canadians also announce their jobs figures, and this key figure here was twice what was expected. 3 times previously, but more than twice what was expected. This was the big plus for the Canadian dollar on Friday. Yes, unemployment rate ticked up a wee bit, but participation rate was up as well. But it was this big number here. Net change in employment was a huge number, and they hadn't been affected particularly by the hurricanes or anything. It was a huge number for October. So that explains the big move we had in the Canadian dollar, which was much more sustained. It went down. Yes, it retraced a bit. The dollar got some back. We ended up back here at 127.62. But compared to the big, so that was only a 30 pip retrace compared to where we'd been. So it was a big positive move for the Canadian dollar on Friday. So that was news fitting it. That was a movement that fitted it with the news rather than going against the news. Okay, and I can bring up lots and lots of examples like this. Izzy's asking which forex pairs are best to trade with which news releases. You are now referring to Euro USD with USD. Is that the pair to trade with the US dollar? Right. Let's just answer that question. Let's go back to So the key thing is the event that impacts on the calendar. The event that's affecting the currency will be here with the little flag or the little number. So obviously this is NFP, but it could be in anything. The impact will be particularly on the US dollar. The US dollar Canadian dollar was the biggest mover on Friday, Izzy, because we had that classic good news, bad news. So we had bad news for the US dollar, good news for the Canadian dollar. We had a big beat, we had a miss. So consequently, we had this reaction. We got a weak dollar, positive Canadian dollar, so USD CAD goes down because it was strong Canadian, weak dollar, and that's the sort of thing that happens. Generally, when US news comes out, it's the euro dollar that everybody focuses on because that's the one that's traded the most, that's the one with most liquidity, and that's the one with the highest volume. So that it tends to be the euro dollar. Obviously, if there'd been euro news out, that would have an impact. How do you trade these so many news that might affect each other? Well, that's the issue, Nilwandi. That's why I say take a step back and look at just the high impact events. Okay, so where are we? The red events. So for this week there was only 10 red events. So look at those events that were affecting. So you would trade look at the impact on the dollar, whatever this number came out at, against its other key currency. So if you're trading against, you could trade against the euro, against the yen, against the pound. It's really up to you. Okay. How long can these news affect the market after release? That's a very good question, actually, Richard. That's a very good question, and that's sometimes why I'm quite skeptical about the impact of NFP. And I think this sort of illustrates my point, I think. So NFP was negative for the dollar, yes, but the euro dollar has been in a general downtrend for a while now. Let's see if I'm bringing a different. Let me just bring in. Oh, it's not going to let me bring that in, is it? I have to bring the whole thing. Let's just bring in this as an example. So let's just, hopefully you can see all that. Let's just bring that. I don't know why that's stuck on there. It's my Reuters icon. So as you can see, hopefully you can everybody see this now? Yeah. So the euros had a really, this is a day chart, so the euros had a really good run up. We got to this 120 level and we've been coming down ever since. So the impact of NFP on Friday is this day here. So it's really, really lost in the whole nuance of the downtrend. So the downtrend has been in place since the top at 120, and the dollar's been increasing for the last few weeks. So although NFP is a high impact event on the day, you couldn't really tell from that chart, could you, that Friday was NFP day and it was a big miss for the US dollar. So it all depends on your time frames, Richard. Okay. What are your stop loss often on the average in most of the news you trade? I tend not to trade the news, to be honest, Richard. I tend to trade the impact thereafter. Okay, so actually this is a good example actually. So although the although the news was negative for the dollar, the end of the day, after all the hoo-ha at 2:30, the euro dollar closed the day down. So the dollar improved from the beginning of the day. So it closed. The dollar was there when it opened on Thursday. Oh, sorry, when it closed on Thursday, it was there at 116.56. The hoo-ha of the NFP and all the other data that came out meant that the dollar actually improved and closed the week, which is the close of the week is much more significant than the close of Thursday, because the close of Friday is much more significant because it's the close of the week, and it closed down at the week where it opened the week. Is that Friday? Oh, sorry, Friday, Thursday, Wednesday, Monday, Tuesday. No, so it started. Is that Monday, the 30th? Yes. So that was Monday. It opened there. It went all the way up and all the way down, and by Friday it was virtually where it started the Monday. Okay. So that's, you know, it's all about the time frames that you trade, Richard, and anybody else that's still here, still listening. Okay. So it's all about time frames. So the longer term downtrend that's been in play on the euro dollar for the last few weeks is still in play. And look what's happened this week. So that was Friday, and Monday, Tuesday, Wednesday has just continued that trend. And as I say, we've plummeted 115.51, a key significant level. As you can see, it's a round number. It's this fractal. I'm getting into some analysis now, but as you can see, that's negative on this day chart still. So negative. So dollars beating up, euros slipping down. Okay. As far as stop loss, Richard, as I say, I don't trade these particular news events, but I always say watch my other webinars, but I always say the stop loss needs to be where the stop loss needs to be. So for instance, if you were trading this pair now on this daily chart, your stop loss should be about here where this blue line is actually, because that's the last fractal high, and we've gone sideways. So yeah, ideally that's actually it's probably there actually. 7 there you go, and it just happens to coincide with the big round fat 1700, 177. So that would be your stop loss if you were taking a short position from here. A safe stop loss because you're way up here. But again, risk reward, but that's weak. Suggesting it's weak because it's punctured this 115.15 level. So again, that's a psychological number. It's done it once. Could well easily have another go at it because it's lower. That wick we've had yesterday is lower than the wick we had back on last Friday before, on the 27th of October. So euro dollar is heading down, and that's been in place for a while. Anyway, I'm getting off the point here, aren't I? So that's trading news. It's not all news is equal. Trade the big events, or if you're an intraday trader, look at the events that really matter, and if you're a swing trader, get out. Richard, it's not a problem. No, if you want to email me at webinars@forex if I haven't answered your question. So anyway, so what is your comment on the other pairs which don't fall into the major 8 currencies per trading opportunities and probability of doing well. Well, the other currencies are the other crosses, things like the South African rand, for instance. I know we've got lots and lots of South African traders. Is an exotic currency, so it's not one. It had the spreads wide, so but it can still trade just like any asset. You can, let's just bring this back on. You could bring any asset and apply technical analysis to it. Whether it's oil here, which is in a big strong uptrend. This is the oil chart on the daily. You can see it on the daily time frame. Again, broke through some key levels, very strong. Nice chart, and you can do that with any chart. You just got to be aware of your stop loss, your risk, the spread on the particular currency. I haven't actually let me just open let's just open this. I've mentioned this, so let's just open the dollar. What time is it? We still got nearly finished. So let's just bring that on. So again, you could apply this to any, but you just got to be aware of the. This is my template I like using, is this black background one actually. So again, dollar against the South African rand here, strong uptrend. It's above it's in the Bollinger Bands are widening. It's above the 20-period moving average. It's sort of topped out here. See these two tops, so it's going sideways a bit, but it's still strong. It's been strong since September. We dipped down a bit middle of October. It's positive, so it's the same principle. Okay, Richard, if you can't hear me, please send me an email at webinars@hotforex.com, and I'll answer any of the questions you might have. So thank you for your time, everybody. Next week we do live analysis every Tuesday. Most of you know that, and then technical or fundamental webinars on Wednesday and Thursday. Next week is about trading journal, writing stuff down. It's another one I haven't done for a while, and it's absolutely fundamental to understanding yourself. Fibonacci with Kay on next Thursday. Mind games, one of the most important webinars I do. All about psychology. Those of you that have been any of the seminars that I do, I talk about it all the time because the markets haven't changed. Cryptos back up on the 23rd. Trade them just like any other asset. The future is here, and it will happen. They are moving forward. People don't need the big banks anymore. Live analysis, algos and system trading. I'll show you what I do and the pros and cons of algorithmic trading and what have you. And then Ichimoku Renko Part 2 at the end of the month. So thank you very much, ladies and gentlemen. Download our app if you haven't got it. Have a look at some of these books. The most important book, best trading book you can ever buy is this one, The Reminiscences of a Stock Operator. Jack Schwager, Market Wizards, that's what I was talking about before when I was talking about Jim Rogers and Marty Schwartz. Two polar opposites, but very, very successful traders. And this one, Trading in the Zone, it's all about psychology. This one, Trading in the Zone, and Edwin Lever's Reminiscences of a Stock Operator, the story of Jesse Livermore. They're free PDFs now, both of them available. So Google them, and you don't even have to actually buy the book if you don't want to. So thank you very much, ladies and gentlemen. I will see you on Tuesday for more live analysis. Jay's doing, what's he doing tomorrow? Is it Fibonacci? I can't remember. Hang on. Oh, it's not there. It's missing. Why is it missing? I've missed him off. Oh, there's a one tomorrow. I can't remember what it is tomorrow. But anyway, more webinars tomorrow if you need them. I think he's talking about. Let me just quick check before I go. I'm sure he's talking about Bollinger Bands and advanced trading strategy. Fibonacci, it's Fibonacci tomorrow. It was on my list. It was Fibonacci tomorrow. So fascinating Fibonacci. So all our analysis is on analysis@hotforex.com. Email me at webinars@hotforex.com if you want to speak to me. And like me or friend me on Stuart Hot Forex Cowell on Facebook, because there's lots of stuff we put on Facebook as well. It's very intraday stuff as well. So thank you for your time, everybody, and we'll see you next week. Take care. Bye bye.